stage with a short video.
Africa's clean energy transition is not only a technological challenge, it is a financial one. Unlocking the next generation of energy solutions requires more than innovation. It demands bold investment, strategic policy, and long-term vision. Deploying reliable, low-emission energy across the continent calls for new financing models, risk-sharing frameworks, and strong public-private collaboration. This session brings together the actors who can move capital, from boardrooms to the grid. Together, they will explore how to make clean energy not just viable, but bankable. Africa's energy transformation won't wait. The opportunity is here. The time to invest is now. Finance, partnership, momentum.
I love that. Not just bankable, but bankable. All right, please join me to invite on stage our remarkable speakers, starting off with Honorable Tesi Rusagara, Minister of State for Public Investments and Resource Mobilization, Ministry of Finance and Economic Planning, Rwanda. Next is Ibrahima Diop, Special Advisor to the President, West African Development Bank. Up next, we have Mansour Hamayoun, co-founder and chairman, Minex. We also have Stefan Udraogo, managing partner, Stallion Capital Africa. And to moderate this conversation, join me as I invite Andrew Mould, Director Sub-Regional Office for Eastern Africa, UNECA.
So, good afternoon, ladies and gentlemen, honorable guests, participants. It's always an honor to speak in this hall here. Back in 2018, it was the venue of the historic signing of the African Continental Free Trade Area in this very room. So I always feel especially privileged to speak here. In this session, we're going to be effectively talking about some of the financial challenges to rolling out nuclear energy investment strategies across the continent. And I'm very lucky here to be with this distinguished panel. The introductions were very short. Perhaps I should say a word or two more about the profiles of each of the participants. Starting with Honorable Minister Tesi Rusagara. She's the Minister of State of Public Investments and Resource Mobilization, and she's the former CEO of the Agaciro Development Fund and Managing Director of Kigali Innovation City. She holds an MBA from Stanford and a finance degree from the University of Cape Town. Then Mr. Ibrahima Diop is the Special Advisor to the President of the West African Development Bank, and he's a veteran of African and international banking with senior roles at Citigroup, Barclays, EcoBank. He holds an executive MBA from Harvard University and an MBA from the University of Dallas. Mr. Mansour Hamayoun is the co-founder and chairman of Minex. Minex. And he's the CEO of Bbox. You like double X's in your company titles, don't you? Bbox, which is a next-generation utility company. He has a background in electrical engineering and experience in scaling decentralized energy solutions across the continent, particularly here in Rwanda, I believe. And then finally, last but not least, Mr. Stefan Udraogo, who is the managing partner of Stallion Capital Africa. He's a former advisor to the president of Burkina Faso, and he has a background in corporate finance and SME development. He holds an MBA from Lubin School of Business in New York, an executive education degree from Harvard Business School. So you can appreciate we have a very well-qualified panel to be discussing this theme. Just to give a little bit of a background overview, I think this discussion is a very timely one, particularly because it falls in the same week as we have the Finance for Development meeting in Seville, which in actual fact I'm sitting in for our executive secretary, who may be well known to many of you in the hall, Clava Gatete, who was the former Minister of Finance, Central Bank Governor, and crucially the Minister of Infrastructure here in Rwanda previously. Mr. Gatete is attending the Finance for Development meeting. Every time we visit a country with our executive secretary, one of his first questions to the counterparts is about the cost of kilowatt hour for electricity. He's always very keen to know that number, just to see about the viability of their strategies going forward. I think it's also very pertinent that we talk about these topics because there's a lot of pessimism around development finance currently. So the OECD currently is projecting a drop of about 17% in development finance this year after a 9% drop last year. So certainly official flows are not looking very good at the moment. And yet it's very clear that our member states want to go ahead with these long-term visions of nuclear energy. Kenya has announced it's going ahead with its first SMR. Rwanda is also very keen on moving forward. We heard in the morning that for 20, 30 years there was very little movement in terms of provision of nuclear energy, and suddenly in the last year or so things have suddenly been changing and there's a lot of renewed interest. So in my own home country of the United Kingdom, just a week ago they announced the Hinkley Point 3 nuclear power station going forward as well. And all this in the context of where there's a very significant gap in development finance across the continent. A report from some years ago now by the African Development Bank estimated that the continent needed to be spending about $170 billion US dollars a year on infrastructure, and the financing gap for that was very severe, of about 100 billion. So that's the general context. How do we bridge this gap, and how do we move towards a system which is better at providing longer-term developmental finance for our member states? So I wanted to frame it in that general context, and then perhaps we can try to not only resolve the puzzle of how to finance nuclear energy, but also reflect a little bit on some solutions to development finance in general. So with that introduction, I wanted to pose the first question to the Honourable Minister. Just a question really about across the continent, particularly in Eastern Africa, we see high interest rates tend to pervade, and we're also afflicted by low savings rate. So I was wondering how you think that we can reshape long-term developmental finance in the region. Should we consider, for example, strengthening development banks, like the Trade and Development Bank, for example, in Eastern Africa, or reforms of the private banking sector? What kind of things do you think would help in terms of facilitating greater long-term finance for our member states at an affordable price? Your first reflections.
Thank you, and good afternoon, everyone. I think Andrew mentioned it, you're quite accurate. The financing landscape, as we know it, is changing. We traditionally focused on grants and concessional financing. That bucket of financing is increasingly coming under pressure, and I think we've seen a lot of that happen this year. We're increasingly going to have to look inwards and think about how we rely on domestic financing or pooling regional financing together. Now, maybe speaking still on the development financing, it's not completely dried up, it's still there. We still have the multilateral institutions such as the World Bank and the AFDB and others. But the level of concessionalities which we relied on for many of these long-term projects is increasingly reducing. And so we need to find ways, while these windows are still open, how do we leverage them to mobilize more private sector capital so that we're able to de-risk the private sector capital. So this could look anything like providing more guarantees, increasing the tenures that our financial systems are able to offer to private sector, and then so that eventually when we're able to, for every dollar of concessional financing that we have, we're able to crowd in more private sector financing in addition to the public finance that we have available. So I think the opportunity we have now is how do we make sure that we're able to take advantage of this low concessional financing, especially for for long-term high capex investments such as nuclear. In nuclear specifically, one of the challenges has been that it's been excluded by the development finance community. Of course, we're starting to see progress. We heard in the last session about the MOU signed with the World Bank, but it will also take time before institutions shift to be able to focus on nuclear power. We also have taxonomies that exclude it, so it's not considered green energy in many countries. So I think there's a lot of structural shifts we need to make so that we're able to, so that it's able to access and be part of the projects that can access development financing today. Now shifting to looking inwards, we've traditionally focused on, when we talk about development finance and the long term, we need to start looking inwards as a continent. We need to look at the resources that we have from taxes. We need to look at our financial sector. Our financial sector, at least in Rwanda today, accounts for 67% of GDP, and it's growing at 20% vis-a-vis 7% of the overall economy. So in a few years, it will exceed the GDP that we have. The reality is that a lot of the financial sector in Africa has traditionally focused on government debt and government securities, but at some point, they just won't, I think, especially with ongoing fiscal pressures, but even just looking at the growth of the sector, there's not going to be enough securities to satisfy the growth in their assets. So they need to innovate and they need to look elsewhere. So I think there's really an opportunity to start to work with our financial sector and system to see how we can bring it in to finance many of these long-term projects. And then we're able to de-risk both from the public finance side, but also from the development finance side, just to make sure that we're, to take advantage of the larger pools of capital that we have today, but the fact that they're not always going into the projects that require that financing the most, just given the current setup that we have.
Thank you. You talked about the importance of leveraging greater private sector capital for these endeavors. I wonder if I could turn to you, Stefan, talking about how we could really leverage blended finance and PPPs in a way that can be structured to attract long-term investors, but while still at the same time ensuring the affordability for governments. Your reflections on that would be.
Thank you very much, Andrew. I'm agree with the minister, but the government securities are very short term, 7 years, 8 years. And here we're talking about projects for 60 to 80 years. Yeah. I don't know if somebody knows in this room, a project in Africa will last for those duration. So it's very, very difficult to structure. So the good news of that is what? Is the last board of the World Bank announced that the World Bank is going to finance some component on the nuclear energy. It's a good news because that bring what? That bring new money on this kind of project, long-term money, because the World Bank yield and rate is very low, it's concessional, and the duration is between 30 to 50 years. So we're starting to have some solution. And this kind of information bring confidence, because we know that the government can do all the grants and a grant to start the feasibility and create the right environment. But if you don't have multilateral organization who actually come to give confidence for the long-run financing, it will be very hard to structure it. So layer one, government. Layer two, multilateral institution. Then we can now start about our actual issues. Our actual issues is related to green and climate solution and problems. So all those climate and green bond are on the table. So many countries and European organizations are keen to invest in those kind of bonds. Layer 3. Layer 4, again, our African and West African and regional bank for Eastern, Central, West Africa, South Africa can do their work, their part on it definitively, because they will bring what government cannot put on the table, and it will facilitate all the things, and they will try to provide mid-term finance. So this is layer 4. Then we are going to talk about the private sector, where a company like Stallion Capital is going to try to advise or structure the PPPs with this kind of project. Because the private sector can come, but the return on investment for a private sector cannot last for 80 years or 60 years. So they can come for the management of the project. They can come to do all things, we can find difficulties like maintenance and so on and so forth. But the stay cannot be more than 25 years, because when you look at all the IPPs in the energy sector, its maximum is 85 to 30 years. Right. So the private sector can come to the last layers, and this situation can be a solution for the financing on the SMRs.
Right. So that leads, I think, to a question to Mr. Ibrahima, working with the West African Development Bank. I was wondering if you could have some pointers towards how we can develop financial instruments that can really help de-risk and attract capital for SMRs going forward.
Thank you very much. I'm happy to take just 1 minute of my time to really thank the President Paul Kagame and his government. I think that what I'm seeing is that they're uplifting Africa as far as this compensation energy is concerned. And I think that we shouldn't take that for granted. And equally, I want to also thank Prime Minister Zerbo for his leadership. And he knows that at BOAD, we're a big fan of him. And we are following, and we will be there. You know, when the time comes, we'll be there. Coming back to, and I think you mentioned it, the interest rate and all of that. Let me just give you 2 examples. In 2021, we came out, actually, to set the scene, 75% of our resources come from the international market, 75%. In 21, we went out to the market and were able to raise 750 million at 2.75. Earlier this year, around March, we went back to the market and raised 500 hybrid loan. Nothing has changed, except the cost of the financing cost. We're an investment-grade bank, and you know, all our fundamentals have remained the same. I think what we really need, and Stefan has alluded to that, is helicopter money is finished. Helicopter money is finished. We're not going to get, Africa will not get any helicopter money. One is, you know, our friends out there have their own problems. And second, I think we need to make sure that we build internally and strengthen our development banks and create that kind of alliance. And we're working on that. I think Prime Minister Zerbo and Prime Minister also Zain had mentioned it this morning. We're taking the lead as far as we're concerned. We're looking at how do we put all these African development banks, whether they're national, regional, or continental, to be able to absorb these needs. We're talking about, I think, 1.2 billion for, you know, yeah,
300 megawatts.
For 200 megawatts. Right. Currently, every year, I invest is to use that 1.3 billion I'm using for the West African, the 8 countries, for one project. So we need to merge our balance sheet. We need to merge our balance sheet. We need to create that alliance. Obviously, we also need to increase our capital structure. And that's what we've done. We've moved from 1.5 billion 4 years ago to 3 billion this year. And that's, I think, the team, and that's what we need to keep on doing.
So what I'm hearing from Stefan and yourself is we really need to upscale the operations and activities of the developmental banks in our regions. Yeah? So I know in our region, the Trade and Development Bank has successfully upscaled its capital from about 1 billion to 10 billion in a relatively short time frame, but that's still relatively small compared to the scale of the needs for these kind of long-term projects, isn't it? Mansour, if I could come to you, because you've been doing things on a different scale. You've been very successfully working on decentralized energy provision, solar, and the like. I was just wondering about the lessons that you felt in terms of innovations or regulatory frameworks at the small scale that would equally be applicable at the larger scale for these more ambitious long-term projects. I wonder what thoughts you might have on that.
No, thank you. I think it's a super exciting time for Africa in looking at this sort of decisions. When the energy access space started around 10 years ago, there was a real conversation about why now. And the why now was really the mobile money element of the story. So the fact that mobile money became available meant that you can actually collect payment in a very cheap way from customers in rural communities. And when they pay, the system turns on. When they don't pay, the system turns off. And you can have access to solar panels and batteries in a cheap fintech type solution. So that was the enabling platform that allowed the energy access space to happen. The reason I exited from Bbox and set up Minex is that there's one thing that solar was never really able to do properly, which was the conversation around industrialization of Africa. How do we actually drive the industrialization of the economy above and beyond TVs, radios, shavers, light bulbs, etc., at the household level? How can Africa become producers of high-tech technology? So for me, as an engineer by background, I know that we are at a nuclear conference, so we need to be promoting nuclear, but the underlying economic question is really two, which is, what is the cost of electricity that nuclear will allow in Africa? Is that cost of electricity going to lower by introducing nuclear into the system such that it becomes attractive for new industries to set up or factories to set up, etc.? And then the more fundamental question is, what industry, right? Like, so you have all of this new excess power that's coming into the system. What are you going to do with it? If you look at many places across Africa, which has always been a bit of a tragedy for me, is that actually a lot of African countries have excess power generation, right? And it's the distribution, the use of that power that becomes a challenge, right? So you need to be able to put that framework in place to make things happen. I think it's the biggest learning that for me has been really big and important. I know that we talking about development banks and DFIs, etc. If I put it this way, other people's money. If you're looking at 10-year project, 20-year projects that is so essential to the sovereignty of the nation, to the direction of the country, etc., Boad is a bit different because it's an African development bank, or in African context. But it's really important to develop that capital sovereignty at the same time as well, right? So you can't rely on other people's money to have the same policy for decades or 2 decades, etc. We've seen the world is a pretty strange place at the moment, and nothing is really predictable anymore. Which comes to really my last point, which is if you think about the big picture story here, is that everyone gets excited at the end. As an entrepreneur and as an investor, what I've learned is that the most exciting phase of any project is in the beginning. The conversation I've been missing throughout the day is why African countries are in the future. We saw a presentation with 10 companies or 5 companies earlier on. Why not already partake in the investment of those companies, in the journey of that creation? Why not create the industry that we like? I think we need to actually think bigger, right? And
In the Financial Times by Martin Sandball, he said financial nationalism is back. Financial repression refers to policies designed to steer capital to fund government priorities rather than where it would flow in unregulated markets. Is there an agreement amongst people on the panel that we're shifting to a new world order in finance?
Absolutely. I think like everyone is more taking care of themselves first, and you can't rely on long-term policies. If someone 3 years ago said that ESG would not be as important in investment in energy, or oil and gas will be back 3 years ago, you would be kicked out of the room, right? Clearly that's the case. Today, World Bank has allowed nuclear investment to take place, but who knows in 10 years' time if that policy remains. But if you have if those projects are so strategic, it's very important to take ownership of that destiny.
I'd like to come back to something the Honourable Minister was talking about, leveraging private capital as much as possible. How do you believe that public investment can help de-risk and attract private capital to SMRs? We agree that we need blended finance to make these things viable.
And I'm glad the B-Box is here, because I think that was a very good example of private capital off-grid solution, and through our development bank, we were able to de-risk the customer demand with shorter-term loans. But I think for nuclear, first of all, it's a new technology, it's complex. So the first de-risking we're doing is even just having this institutional setup, the ability to have an agency, to start investing in the talent, to convene a gathering like this, which will continue, I think is also important, because this is a complex area. We need our regulatory frameworks are not set up. We from a government perspective, knowing what skills to invest in. So starting with the institutional framework has helped shape what should be the direction, and helped shape the conversation about where do you start to invest. So I think that's the first step. The second is on demand. I think where we will need to take on, as we have with other energy projects, I think there's the openness to how do we address the issue of demand. Is it a PPA? How do we sign up? How do we ensure that whoever is investing in SMR has, at least they know that the government will purchase at some point. But beyond the government, I think this is where I would want to agree with Mansour, is that the private sector. If you see what's happening in the US, Google, Amazon, everyone, all the demand drivers are investing upfront so that they can have energy security. When we had an AI summit 2 months ago, and everyone was pointing out that, oh, we won't put data centers because Africa doesn't have enough energy. Everyone talks about mining. We won't put processing in Africa because you don't have enough energy. So if we're able to structure around how do they all come in and support, so it's not just government on our fiscal, within our fiscal space and on our balance sheets de-risking, but it's also bringing in the private sector to de-risk the demand side. I think we'll go a longer way for bankability than what we're seeing today.
I would imagine from the point of view of a policymaker, the real risk is getting that negotiation just right, so you don't create vulnerabilities for government finance going forward. And there I'm just thinking of the case of Hinkley Point C in the UK, which has actually not involved any public money at all, but has involved a lot of guarantees on the public side. So they have a contract for difference where they've guaranteed the revenue. They've fixed the price of electricity for 35 years to help de-risk the project. And they've also put in all kinds of legal protections and private capital protections. So there's no direct funding, but the government is taking the risk. I guess these things are inherently difficult for policymakers to negotiate, because you have to anticipate what will be the market situation going forward. I also wanted to just raise the point that in the difficult fiscal situation that many governments in Eastern Africa at least find themselves at the moment, with quite high debt to GDP ratios and fiscal deficits, I guess there's a limit to what any one government can do alone. And that brings me back Ibrahima, to something you were saying about the necessity to coordinate amongst member states to do these kind of projects jointly, because alone it may just be financially too demanding. Would you like to say a few words about that? Or Stefan, I believe you also spoke to about the same point.
Yes, and
Please come in.
Yeah, I'll let Stefan go after.
Yeah.
You know, obviously, if you look at the way things work, actually, and especially when it comes to making sure that we respond to the demand, to the needs. I think we need to think differently. We need to have a different approach. And that's actually what, and I want to really raise that point, because we're here talking about nuclear energy and the way we used to look at energy overall. We used to look at energy as a segment, as an industry segment, just like agriculture, just like infrastructure and so on. But I think we were wrong. I think energy is an enabler and should pass across all those sectors. And that's currently what we are trying to do. And I think that coming back to how do we finance, I think at the end of the day, when things go wrong, who do you have with you? Your shareholder. So I think those development banks need to invest in capital, not just on loans. Be part of it. Invest on capitals, on equity, sorry, and make sure that, you know, when things go wrong, they are there to support the companies. Stefan, I don't know if you want to.
Yeah, I'm totally agree with you regarding that. And it's where equity is very important. And we have to open the equity. You know, I have an example of on mining sector. All small holders, Canadian or Australian or English from England, can buy shares on mine in Africa. But no African can buy a share of those companies because they are not listed locally. Right. So that means what? That means we have to change the paradigm. You have to change the game, because if the national and the diaspora don't have the access to those kind of financing, they won't do it. They will still do other things or buy government bond or whatsoever. But we have to change the game on that and open it. The second point is, yeah, we cannot think national, one country. We have to think regional. A project like that cannot be only one country can afford it. As Ibrahima was saying, it's a huge amount. The total investment financing of 1 year of West African Belt of Development today is the cost of 300 mega or 200 mega nuclear SMR. So we have to do a coalition, and those coalitions can come with our regional organization. In West Africa, we did the West African Power Pool, for example. I know the Minister Bashi is here. It was a key project, but today it brings what? It brings that Ghana or Ivory Coast can supply energy to Sierra Leone or Guinea or Mali or other countries. So we can do it. We have the knowledge, we do it, we have the organization to do it. The third point for me, it's very important. It's if we want to develop the transformation of the mining, we cannot. The minister was talking about it. We cannot export bauxite from Guinea and having the political will to transform it into aluminium and don't have the right energy for that. You know, the amount of energy linked to that is huge. And I don't think even the Guinea itself can afford it. So we have to think about those kind of projects to be a catalyst to give this opportunity to more structure all those projects for the long run. Yeah. So yeah, it's the 3 points that I want to add.
I seem to recall there was a problem with the Moselle project in Mozambique, precisely because of the cost of electricity that it was importing from South Africa to make the whole project viable.
Exactly.
So your point is well taken.
Andrew, I think one thing I would also add is how do we standardize, sorry, how do we standardize our financing, right? So if you look at, even with the development banks, they all have different agreements. So when it comes to, can they package that, bundle it, and put it on a stock market, and then recycle that capital back? It would be very difficult, if I'm not mistaken. If you look at equity, what has worked in venture capital is the safes that came up for tech companies, that even African companies are using today. They set up in Delaware, the agreement is a standard agreement, and then everyone can invest. We don't have that in Africa. So I think when we talk about standardization and regulation, we also need to look at how do we standardize our financial instruments so that we can scale, so that you can sell them to a pool of pension funds, so that you can recycle your capital. So it's good to hear that the development banks are coming together. And I think this is another opportunity we have, whether it's with equity, but whether it's with debt, so that we'll be able to reduce the transaction costs of investing in the continent and then investing in these large-scale projects as well.
Yeah, point well taken. Mansour, you were talking about the importance of a degree of financial independence. Countries, own their own strategies there. The one standout example for me from Eastern Africa is the Grand Renaissance Dam in Ethiopia, which cost approximately the same as an SMR, around $5 billion. And I mean, it's been a real major project for the Ethiopian government, finalizing that construction. Now, they did it with some external finance from the Chinese government, but a lot of it was actually domestically mobilized through domestic sources, through crowdfunding, including the sale of bonds and contributions from Ethiopian citizens and diaspora. What do you feel of that kind of experience, where it does reflect a degree of financial repression to be able to carry out that strategy, but it seems to be quite effective in terms of achieving the government's goal? How do you feel about that kind of finance strategy going forward?
I think financial innovation is totally necessary for this scale of projects to happen in Africa, right, or any country in Africa, because a rightly executed project can transform the country and make it super rich. But a badly executed project and selling electricity, it's the UK example of 35 cents per kilowatt hour, is a great way of bankrupting a country as well, right? So there's a fine balance between the risk-reward that nuclear is offering of that scale and size. And for any investor to invest, unlike in solar where we were invested in 10 different countries, you have a diversification of risk, etc. Here you're putting a large asset in one place, so you really need to also trust that the environment will maintain under certain expectations over the foreseeable future, 60 years, 50 years, whatever the lifetime is. So, but I think the opportunity at the Ethiopia example is interesting. Because what it clearly shows is that normal ways of raising money is not sufficient to achieve those ambitions. And many of these projects are nationalistic in nature. Like imagine nuclear coming to a country. That's a moment of pride for citizens, etc. So people's ability to participate in the future of their economy, right, is a great thing to mobilize that. Now, how you structure it comes in many, many different ways. I think someone earlier on talked about the power of tokenization and other sort of innovative financial framework. But the important thing, and this is the thing I want to really get to, is that we have time right now, right? Because before the first dollar is really spent on constructing the nuclear side, we are at least 5-10 years away, right? There's a lot of time to raise capital. Even by the time the first shovel goes on the ground and the nuclear is up and running, is another 5-ish year, depending on who you believe, 5 to 10 years. So if a country can't mobilize $1 billion, any country in Africa, in a course of 20 years, I would be surprised. So it's more about organizing that event and having that sort of approach, and innovative financial models should be welcomed. I don't know enough about the Ethiopian example to comment in anything specifically, but the fact that they managed to raise $5 billion and get a dam up and running is pretty damn impressive.
Yeah, thank you. We only have a couple of minutes left on this session. I was wondering if the other speakers would have any final thoughts to come back on for the audience. No? I don't believe they leave any space from questions from the floor, yes?
Yeah.
Is there an opportunity to do that? We could take a couple of questions from the floor. The only challenge being the lights are so bright here, we can't actually see any hands go up, I think. Any questions from the floor?
There's a question.
Gentleman over here, I think.
Thank you very much, panelists, for such an interesting session. My name is Dr. Flavius Nkupli from Nigeria. My question is, actually I picked interest in one of the panelists' conversation. Following all the discussions we've had so far since morning up to this evening, how can we really bridge the gap, the technology divide between Africa and other countries in terms of human capacity development for us to really own, in terms of intellectual property, technology transfer, as one of the speakers have rightly said, looking at the gap that exists and the financial challenges, leveraging on our human capital, and particularly with the young population. Thank you.
Is there a second question at all from the floor? No? If not, there is a hand.
Good afternoon. My name is Narek Aritanye. I work for a regional company, hydro company in, between Rwanda, Burundi, and Tanzania. So I just want to first I heard something about Africa. Demand of power is high, of course, but we need it times 10. But large projects tend to take time, and even if it's a $1 billion, I know bankers are very risk averse, but you don't spend $1 billion in 1 or 2 years. It can take even 20 years or 10 years. So having said that, my question is specifically, why don't we in Africa touch on our pension funds, which have a lot of resources to invest in these critical assets? Thank you.
Okay. So, Ibrahim, Stefan, maybe you'd like to answer on the pension funds, or?
The last one, I think, the last question, I think that's exactly what we are trying to do as far as our region is concerned, and trying to cap not only to the local market, but, you know, obviously, I wouldn't take that bet, but how many of us have our savings in our countries, you know, here in this room? Mostly we tend to invest somewhere else, not necessarily in our countries. I think the first move for all of us will be to make sure that, you know, we invest in our countries. And obviously, what we are trying also to do is the diaspora. I think we've moved from this social diaspora approach to a more investment type of diaspora, and we need also to build that bridge and make sure that whatever is out there coming from our brothers and sisters overseas come back to Africa, to our and I fully agree with the pension funds. That's exactly also what we are trying to do in our region.
Yeah, and I think that also links a little bit with the question on human capital development. Honourable Minister or Mansour, would you like to say a few words on that question?
Yeah. And just building off on the pension funds, I think there is appetite from the pension funds because also similar to the banks and financial sector, they're getting to the point where your assets need to be deployed and you don't have enough investments to deploy them in. Granted, pension funds and people will prefer safe securities when it's possible, but I think what we need is more structuring, taking into account their considerations. They can take a bit of risk, but we don't have enough structured products for them, even for the diaspora. We talk about bringing diaspora investment, but we're not creating enough products and creating them fast enough to be able to give the pension funds and the diaspora. So nothing stops us from, even if you're an energy provider today, from structuring your PPA and selling some of that because it's guaranteed revenues to a pension fund. I think we're not being creative enough and thinking through the life cycle. People end up holding for a very long time, yet they can actually exit. For skills, the model we've used in Rwanda, I think, is you both, in tech, they say buy and build. I think we've made this an open place for talents from education, educating in different sectors, trying to bring as many people to educate them here. But then also where we have gaps, we're open to talent coming in and supporting us. The chair of the board, I think he spoke this morning, he's not Rwandan, but he's still part of this ecosystem and supporting us to build out the nuclear ecosystem. At the same time, we're investing in the talent. We've been sending out students to make sure we start to build out that pipeline. I do think we have a lot of talent out there that we're, even within just the African ecosystem, that we're not leveraging. And we could do more where are they, what are they doing, how do we interest them to be part of the skill sets that are required. And then where we don't have them, we should just be comfortable to buy the skill sets and open up our talent markets so that they can, we have the right skills in markets. I think some of these sectors need some level of density to be competitive. And sometimes we say we don't have skills, but at the same time, we have very closed borders to skills. So it's a choice that has to be made. I think we've made that choice to be as open as possible so people can come and work from here and study from here and build from here.
I think this is one of the reasons why that African Continental Free Trade Area that I mentioned at the beginning of this session is so important, because one of the flagship projects, associated projects, is the Free Movement Protocol, which will give the right to young people to study and work in all other member states of the African continent. And I think that would be a very valuable addition, I think, for many, many countries in terms of bridging those skills gaps. The red light is flashing now. We're 6 minutes over time. I'd just like to end by thanking the participants in this panel, wonderful insights that they provided. And also, on behalf of our Executive Secretary, Clava Gatete, thank the organizers for inviting us to be involved in this very, very important meeting. So I think a round of applause is in order. Thank you very much. Thank you. Thank you. Thank you, Stefan.
Thank you very much. They deserve another round of applause. Thank you. That was another insightful conversations. Let me just point out that tomorrow there will be a session on youth empowerment and capacity from the panelists. Then there will be one on women championing nuclear energy implementation in Africa, and there'll also be a session on accelerating nuclear regulation in a rapidly changing world. That's just a bit of what will be on the program tomorrow. A big thank you to Ibrahim, Honorable Tessie, Mansour, Stefan, and Andrew. Now, if you or someone that you know lost their pair of glasses, please send them to me. I will hand it over. I had 2 phones with me, they've gone, so the owner of this should definitely come. We have come to the end of day one of our two-day inaugural summit. Let us give ourselves a round of applause for being an audience that is awake. It has been such a heavy, heavy day, but who said that discussing nuclear energy will be a walk in the park? It was never meant to be. So thank you so much for being part of this beautiful day, for engaging actively, and we should be meeting here tomorrow at 9:30 a.m. Tomorrow, 9:30 a.m., the session starts. Enjoy an evening of exhibition and networking. God bless you. See you tomorrow.